Singapore's labour market grew in the second quarter as total employment rose more than 3 times compared to the first quarter. Observers say the gains are favourable, but some sectors are still vulnerable. Caitlin Ng with more.
The Manpower Ministry's latest report suggests the labour market is still resilient, even with global economic headwinds. Total employment rose by 8,400 in Q2, driven by stronger hiring among residents in sectors like financial services and health and social services. Jobs in the construction sector also boosted employment for non-residents.
It spells of continuity, but I would say it comes with a tinge of caution, even though the big message is favourable. There are some spots of concern that we have to watch out for.
These include professional services and information and communications. Jobs in these sectors have been on a decline. Market watchers say it could be attributed to the strong growth in previous quarters, with the sectors now entering a period of moderation. The report also showed slight fluctuations in unemployment rates. It edged up in June after dipping slightly in April and May. But analysts say it remains fairly stable.
Unemployment rates remain at the levels that have been, similar to those levels past few years. I think going forward, the outlook may be expected to slightly deteriorate owing to the fact that the uncertainty remains quite high. The front loading has more or less been finished, so it means that we are in for at least a mini slowdown to a modest slowdown in the coming quarters.
Mr. Ng says geopolitical uncertainty may also prompt employers to adopt a more cautious approach in the near term. Still, he says there's room for opportunity, especially within Asia.
With trade to the US looking more subdued, I think companies may also look to Asia as a source of growth, and Singapore is well positioned in the region to be at the center of economic development. So companies who are looking to expand operations or to increase linkages between the various Asia economies, I think Singapore is well poised to take advantage of that.
He adds while many firms are likely to proceed with business as usual, longer-term investment plans may be shelved until the outlook becomes clearer.
And for more analysis, we're now joined by Heron Lim, lecturer at the ESSEC Business School. Mr. Lim, welcome to Singapore tonight. So we are seeing this job growth in the financial services and health sectors, but professional and ICT services are showing declines. So what is driving this and what might it signal to job seekers?
Thanks for having me. I think in terms of the prelim numbers, we definitely see a labour market that is parts opportunity and challenges at the same time. This number is the lowest increase for the second quarter since 2022. So I think that we are seeing that businesses are seeking to hunker down and keeping their operations relatively lean still, with moderate expansion in their headcount overall. And the prelim numbers will also signal to job seekers that it is in fact fully an employer's market now. And what we see more on the sectorial level is definitely positive in that growth in financial service segments like the wealth management and fintech segments are going to be positive. I think the health improvements as well are also pretty much expected given the increasing footprint of Singapore medical needs. But we will need the actual numbers that are slated to come out in September to understand just how drastic the effects on, say, the professionals as well as the ICT services are before we can make a clearer judgment on this.
More on those September numbers in a while, but despite these lingering concerns in the market, retrenchment and unemployment rates are holding stable. Are these fears overblown?
I'll say that they are definitely not overblown. I think employees are looking to the future and they perhaps may not be liking what they see. That even with the MOM report now, that only about 43.7% of firms are expecting to hire for the third quarter. This is not an ideal number given previous numbers was trending slightly above the 50% mark. And hiring season for Singapore businesses also come in the second half of the year with new graduates entering the market. So I think in terms of retrenchments as well, firms do not necessarily act because of looming uncertainty, but because their top and bottom line projections are softening. So, and growth has, from the front loading, aided numbers in the first half. That may not be quite the case for the second half. So I think that fears are definitely still pretty much well-founded for employees.
Meanwhile, Mr. Lim, hiring and wage expectations, they are dipping amid global economic uncertainty. How can businesses and workers adapt for the rest of the year?
I think with regards to businesses, the pivot to Asia is definitely underway, and definitely in terms of asking their employees to actually do more and to explore new markets will definitely be par for course in the second half of the year. And for workers, I think they are going to be tasked to do more by their employers, but without necessarily seeing a great payoff at the end. I think that workers who are gainfully employed right now should hunker down and upskill themselves to prepare for the worst, and potentially also look at their finances and budgets to see that if they have enough for possible emergencies.
Looking ahead to the second quarter labour report coming up in September, what indicators would you be watching most closely? What would signal a real turning point?
I would say that I'll definitely be watching out for the job vacancy and re-entry rates among retrenched residents. I think those numbers will give us an early sense as to just whether the Singapore labour market remains tight, or is there a signs of actually loosening in the Singapore labour market as the second half of the year goes underway. We will get some of that numbers then, and I think with regards to the MAS report that they are looking at potentially growth rates slowing down in 2026. Therefore, we will definitely want to see those vacancy numbers as a priority.
All right, Mr. Lim, thanks for speaking with us tonight. Heron Lim, there, lecturer at the ESSEC Business School. Thank you.